What's the difference between a pre-qualification letter and a pre-approval letter? That's a question that many buyers and sellers ask me all the time. My name is Danholm and I'm a real estate broker here in Central Florida, but I work all over the state and I work with many buyers and sellers, so it is something that comes up in conversation quite frequently. So I thought I'd spend some time going over the actual differences here in this video. The pre-qualification letter is a letter that provides you an estimate of how much you may be able to borrow based on the information you submitted to the lender. It's not as strong as a pre-approval, and it's usually done for free over the phone or with a short application or short questionnaire, I should say, over the internet, because it's not really an application. It's just a questionnaire you fill in, and it does not require any credit history check. It does not require any documentation to support what the information you gave. So, with the pre-approval, on the other hand, it's a definitive answer. It's basically a promise from the lender that they will lend you some money, and they will also tell you what interest rate and on what terms they'll lend you the money. It's something you can use to speed up the buying process in the way that it will prove to the seller that you are able to buy the home that you're looking at. It does require a full mortgage application, and it usually requires that you submit documentation to support whatever information you put in the application, and it almost always includes a credit check, so it will affect your credit score that you get a pre-approval. So when should you use a pre-qualification versus a pre-approval? Well, if we go from the seller side, if you're a seller accepting an offer from a buyer, you should never accept anything less than a pre-approval or a bank statement showing that your buyer can actually pay for this house you're selling them, because you do not want to take a house off the market unless you're certain that your buyer is able to move forward with the deal. As a buyer, the pre-qualification is a tool that you can use if you're early in the process. Say you're not really certain that you want to move. You might actually only just want to know how much home, if I were to move, how much home could I afford? Well, that's what the pre-qualification can do, because if you give the correct information to the lender, they will give you the correct loan amount you can borrow, and they'll also usually give you a ballpark interest rate. It's or you can use it to figure out like I said, whether or not you should move, or even if you have started to look at homes but you're not quite sure about the area yet, you're not quite sure where you want to live, you just want to, but you still need to know your price range. That's when you use a pre-qualification letter. Once you get to the stage in your home search where you know that you are going to move, you definitely decided that you're going to sell the old house or move out of the rental you're in now. You definitely decided that when the right home comes along, that's when you want to sign on the dotted line. That's when you want to move forward. Then that's when you need the pre-approval, because your seller should never accept an offer from you unless you do have a pre-approval letter. And you should also not sign on the dotted line unless you have a pre-approval letter, because there might be something when they do your credit check that you are not aware of. There might be something that you cannot fully prove to the lender's satisfaction. So you might not actually be qualified for what you thought you're qualified for. So when you're certain that this is when you're moving forward, that's when you need the pre-approval. And the pre-approval will give you that certainty, because it is almost always only contingent on a couple of things. One being that your financial situation has not changed since you got pre-approved. That's really important, and I'll get back to how you can prevent any issues with that. And it's also contingent on the home you're buying, whether or not it's worth what you're paying for it, or as they call it in the industry, whether or not the home can appraise. And they would also want to make sure that the home is mortgageable, which means that there are no issues with the title. That means that they can't get the position in the order of liens that they want, or maybe in some condos they are not mortgageable because of certain rules they have to comply with. So when you submit your offer and you are pre-approved, you know that it's not going to be your fault if this doesn't go through. Your situation is clear. The only issue now at this point in time is whether or not the property is good enough for the lender. If the property can appraise and there are no issues with the property, that means that it cannot be mortgaged. So, but like I said, the pre-approval is contingent on your financial situation being the same as when you got the pre-approval. And there are certain things that you can do to avoid any changes that the lenders don't like. Basically, in very short terms, don't do anything. Well, what I mean by that is don't go and buy a car, whether or not you pay cash for it. Don't buy any major items, any big items, because even if you don't take out a loan to purchase them, your lender has looked at your savings account. So if your savings drop significantly, that might mean that your pre-approval is no longer valid. Don't go get a new job until after you closed on your new house, because even if that house is, even if that job is better paid than your previous job, it's still a new job with all that uncertainty that implies that you're not a fit for your new employer. Maybe you lose your job, and I can almost hear everybody say, well, I could lose my own job. Yes, but you have had some time of stability, and the lender knows what you did the time you were with your previous employer. They don't know for certain that you're going to stay long with a new one. So don't change your job don't change your job after you've been pre-approved until after you have closed on your new home. Don't go out, don't go and take out any credit cards. And that's a really strange one. Don't make any large deposits into your bank accounts, because the lender would find that suspicious, because where did you get that money from? So there are certain things that you can't do, and you should always confirm with your lender if there's anything that you think you need to do. Say, I really do need to change my job, you should probably talk to your lender, say, hey, is this going to affect my pre-approval, and what can I do so it does not affect my pre-approval? But be really careful with your financial situation after your pre-approval, and then you can do whatever you like once you closed on the house. But in that window between you've been pre-approved and to you close on your new home, that's when you should try to keep your financial situation as stable as possible. So I hope you found this information useful, and if you have any questions, please do not hesitate to DM me or place a comment below this video or give me a call. My phone number will be in the description. Thank you so much for watching, and until next time, my name is Danholm.